Hello, this is Sanmi Adeagbo. I want to discuss with you some currency pairs in my watch list, and I have the US dollar, Japanese yen, cable Japanese yen, Australian dollar, Japanese yen, euro, cable, and the card CHF. So these five currency pairs are what I'm actually looking at the moment, as they are forming patterns that I can recognize. I love looking for patterns that are well recognized in the market. Okay, before I take any sort of trades. All right, let me take you to my um, terminal. Okay, I will start with the US dollar, Japanese yen. Let me start with the US dollar, Japanese yen. It's loading. Okay, so this is my US dollar, Japanese yen, and it is very clear that the move from here, actually from here, let me zoom it a little. Oh, right. All right, now the move from here, now at this point here, okay, we've been looking at US dollar, Japanese yen for some time now. That at this point here, the upward move, the long-term upward move was ended around here, and now we could see price moving in what looks like a five-wave structure, as it is always expected that after a particular move, most of the time we see a five-wave structure, okay, that follows. And then in this in US dollar, Japanese, in this chart we're looking at here, we could see that the first wave, and we see the second wave here, and then price is going down what looks like the third wave. And the third wave are always impulse waves. Okay, they are always impulse waves. There are five non-overlapping waves, and we could see the first here, the second there, and price is probably completed the third here, or is about to complete the third. So this is the first wave, the second, the third, then the fourth wave here is a triangle. Okay, this is a triangle, so that made me label this as the third wave, because the triangle precedes the last leg that's to complete a particular impulse wave or a particular pattern. So what we are seeing here is a triangle, okay, a converging triangle. Or if price breaks below it, we'll be expecting a move to around 107.77, which is a 61.8% extension of 1 to 3 from 4. So please put a US dollar, Japanese yen on your watch list. Let me zoom it. And now what I'm having here, you can see price is already moving. So how can someone take advantage of this information? A sell trade can be put forward around here. Okay, at the end of this candle, which has completed, the sell trade can be put, but the stop loss must be put here. So this is sort of aggressive. Okay, the sort of aggressive points. Okay, so the stop loss can be put here, and then the take profit, all right, can be around here. So that gives about 3.72 risk reward ratio, which is a very nice one. Oh, and a conservative one is to wait for price to break below here, and then put the stop loss at the top of E wave here. Okay, E wave, sell around here, and then that will actually reduce our risk reward ratio. Definitely it's gonna reduce it to around 2.05. okay, price can still move lower than that. Okay, price can still move lower than that, around 1.5 or 1 point or if it's going to come around there, or 8 points, sorry, 103.8, 108.00. price could actually move down, okay, that way, because once you see a move like this, I will see a congestion, price often continues in the direction. Okay, and this is not just a congestion, this is a triangle pattern that formed at the fourth wave of a supposed impulse wave. So I'm going to put a sell trade here with my stop loss here. Then I'll be looking forward to take profit around there, which is going to give me about 3.7 risk reward ratio. Okay, and let's look at the Gbp yen. That will be the second yen pair that we're going to be looking at, the Gbp yen. Now the Gbp yen, just like US dollar Japanese, at the moment is also going down, but the pattern that is forming in each of them is so different. Okay, let me take you to the daily chart. Okay, on the daily chart here, we could see that a move which started a long time ago, right from here. Okay, if not, a 5 non-overlapping waves ended around here with an ending diagonal structure. So what do we expect after that? We'll be expecting a 5-wave decline, and our price has not actually disappointed in that wise. So we could see a 5-wave structure, but looking at this very well, we could see that I have an alternative. Okay, this could actually be the third wave, wave 1, wave 2, wave 3, and what we are seeing here could be a correction, a fourth wave correction, before price will be expected to move down around here. Okay, which is going to be our golden goose. Okay, taking wave 5 at the end of a wave 4. Okay, but alternatively, that could also be, it could also be that the fifth wave has ended here, so we're expecting an ABC structure, so which is going to be deeper than this count. So this count, the correction that follows this count, okay, it's going to be deeper than the correction that follows this count, because it's going to be an end of wave 5 and an ABC, which could end around this level. Okay, could end around this level. That's 50% or 61.8% retracement of the move from here to here. Okay, but if it's gonna be this one, then we should be expecting a move that is shallower. Okay, that's an ABC. It could be a triangle, it could be anything before it starts moving down. So if we should go with the yellow, the yellow counting, so thinking that what the recent surge we are having in the market is a mere correction. That could be a mere correction before we'll be expecting a 5-wave move structure. So let's see how far price has gone in the intraday price actions. Let's look at the 2-hour chart, so you can see clearly what price is doing presently. So this is the end of the structure that we're talking about, the 5 non-overlapping wave, and then after that we saw a very nice impulse move, which actually proved to us that the decline okay is correcting. Okay, is in a corrective stage. Okay, so this is a 5-wave structure, and this correction could actually be a zigzag pattern, because among the 3 major corrective patterns, zigzag is the only one that has a 5-wave as its first structure before a 3-wave and then a 5-wave. So what we're going to be expecting pound yen to do now is to decline to this level. Okay, so this level is the 61.8% or 50% retracement of the A wave. So if the B wave ends here, you can see it's also a very nice intraday support level. Price will be expected to bounce off. So we're going to be patient and wait for how this plays out before we take this move. Remember, in Elliott's wave principle, we only trade wave 1, wave 3, wave 5, wave A, and wave C. We don't trade wave B because it doesn't pose a very beautiful risk reward ratio. Okay, we want to trade something that could give us a possibility of a 1:3, 1:4 risk reward ratio. Okay, that is what is wise in this business. Okay, in the long run, we're always going to win. So that is it about Gbp. So in Gbp, we're expecting a 3-wave dip, and price bounces off this level, and then we can trade the expected multi-wave that follows, 5-wave structure. Okay, and the next one I'm going to be showing you is the Australian dollar Japanese yen. Now the OCN is okay, let's start from the higher time frame. Okay, for a very long time now, it's been moving in what looks like a very corrective way, long-term corrective wave. Okay, starting from 2008, we saw how it was moving. This is a W, a triangle X, and a 5-wave structure Y. Okay, and now from this level, okay, from here, okay, which is in 2013, April 2013, okay, price moved down in a W wave and an X wave. So we're expecting a WXY downward move. Now the projection of W from X ends here to give us a 100% extension. So price could get to this level. Okay, sorry, 161.8 to 61.8, which is going to be around here. So we could actually see price going down to this region, okay, because the projection of W from this place is where is that? Okay, all right, so this is the 261.8%. okay, so we'll be expecting price to come down to around this level. It's possible because even looking at this trend line, there are so many resistances, okay, for price that could bar price, or that could hinder price from moving up. So in the long-term frame, the long-term perspective, we'll still be expecting the OCN to fall real well, okay, to something around there. Okay, not just that, but the second leg of this WXY structure is is forming what looks like another double zigzag. Okay, that this is ABCX ABC. That's going to be another WXY structure, and the projection, the nearest one is going to be around here. That is 100%. So in the nearest time, or that could be maybe a month, we could see price coming down to this level here, 69.55. okay, 69.5. so let's see the subwave of all this move, and let's see if we can put together some sense of market geometry and see how we can view the market much more closer. We can see that the WXY that we looked at, how it was given a look at this wave 1, wave 2, wave 3, wave 4, and then wave 5. So this is the last one we looked at, the last leg of the ABC. This is where the X ended. So we're having an A, a B. So we'll be expecting a C wave down to the level we pointed at the other time, and it's very possible that we should be thinking of how to sell here. But personally, I love taking things right from the longer time frame and then stream it down to the lower time frame in order to take a more specific decisions, in order to give me more confidence and to bolster a very beautiful risk reward ratio. Okay, we can see that from here there are 5-wave structure, 1, 2, 3, 4, 5, and what we see is an ABC correction. Okay, let me take it to a lower time frame so that we can see it better. And now from here we could see this correction WXY. Okay, is a combination pattern, is very flat. Okay, and now we could now see that price moved in what looked like the last leg. But what is this last leg telling us? I always want to see an ending diagonal or an impulse wave. So this looks more like an ending diagonal than impulse. This 1, 2, 3, 4, 5. So price could still rally a bit, even come around here before we're going to see a move down. Okay, price could be going down anyway, and we may lose out of it. Okay, we may miss the train, but it's better we wait for a complete structure before we get into the market. All right, so this is 1 2 3 4, so I'll be expecting a pull, a rally to somewhere around here. Okay, the rally shouldn't be longer than the third wave. Okay, could be around that 61.3% of the projection of here from here. Okay, let me actually draw the projection so that I'll see what we should be expecting from here and then here. So let me add the 61.8 level, remove the 100, add the 61.8. all right, so this is where I'm going to be looking at. Okay, I'll be waiting for price to come back to 86.75, okay, before a dip. Okay, and the dip is going to be very fast and it's going to pose a very beautiful risk reward ratio. All right, so that is it about Australian dollar yen. Okay, if you are going to actually sell from, maybe you don't want to miss the trend, you find it comfortable, then your stop loss should be above 86.75. yeah, it should be above 86.75 to be on a safe side, because there are still possibilities of taking large move downside. Okay, so that is it about Australian dollar, Japanese yen. Now the next one is the Cadchf. Now the Cadchf, from the daily chart, the Cadchf is forming something that looks like the bat pattern. Okay, that one, the harmonic guys are so familiar with that, the harmonic pattern traders. Okay, it's forming something like a bat pattern, which is going to end around 0.7620. okay, the kind of structure we're having here is calling for a sell. Yes, it's calling for a sell, but we always want to see something that is complete. Okay, we don't want to be ruled by our emotion or what we think the market will quickly do, but we have to follow a system, even if it means that we're going to miss opportunities. No problem, but we want to take high probability trades that will make us win more often and even make us to win higher than when we lose. So we're going to be expecting a move to this place. All right, and now this is still supported by the Elliott wave counting that I did. Let me take you to the 4 hours. Okay, let me take, okay, even the 1 hour. Let me take you, okay, let me use the 2 hours, and then let me stream this. Okay, now this is the ABC, the C leg of the bat. Okay, look at the first leg is a 5-wave structure, the second leg is an ABC, okay, zigzag, and then the third structure is, is expected to be a multi-wave, and this looking like an impulse wave 1 to 5 here, which is the wave 1. This is the second wave, this is the third wave with this diagonal, and then what we are having now is the fourth wave. Okay, fourth before we move here. Okay, so we'll still be expecting price to go higher. Besides, this is the 61.8% extension of wave A from B. Okay, and now this is where our bat is supposed to end, 0.7620. so it makes 0.7620 to 7706 to be a very strong reversal zone. So I will be waiting for price to get here. Like I said, we might still miss the opportunity and price will start moving down, but we just have to follow our system and wait till our system tells us what to do. This puts us in the right frame of mind. It's more safe like that. It's safer waiting for a system to dictate the move before we just jump in there. So we'll be expecting price to move around there before I personally sell. Okay, so that is it about Cadchf. And now the Eurgbp is the last one I'm going to be showing you. All right, the Eurgbp is looking so interesting to me, starting from this from the head and shoulder pattern that we are seeing here. Look at this head and shoulder pattern. Is not formed, is not completed yet, but it's forming. Okay, this is the second leg, this is the first shoulder, the right shoulder, the head, and now it's a very beautiful head and shoulder. Normally head and shoulder, this is the break line, the neckline rather, and price is expected to break below here and then move as long as what we have here, projection from here, okay, down here. Okay, now from the Elliott wave perspective, the move from here, okay, the move from here is an ABC move. Okay, let me take us to the probably to the daily chart. So the daily chart now. Let me take us to the daily chart. Okay, now the move from here, we starting from this level here. Okay, we saw around here, that's 2013, we saw the wave price move in a 5-wave structure. What we are having here is an ABC correction, all right, an ABC correction, and what we are having, this is ABC. Now the C wave here is expected to be an impulse wave or an ending diagonal. So if you look at our 2-hour charts, zoom it, then we could see that, okay, this is the B wave there, this is the C wave, 1 2 3 4, and then we could see that the 5th wave is actually an ending diagonal. And then at the end of this movement here, price broke below, bounced off here at the 61.8% retracement of this place. Okay, price moved, and then we should be expecting a 3rd wave here, then 4th, and then we should be expecting a 5-wave move. Okay, this is a 5-wave structure with 1 wave, 2 wave, 3 wave, 4 wave, 5, and ABC. So we should be expecting at least about 100% or 61.8% projection of this particular move then from here. Okay, so let me add some levels so that we'll know which level we are going to be looking at. Let me remove 61.8, let me have 161.8. okay, now these levels, so these are the levels we are going to be looking at. So a sell trade can be done here actually, and then we should be expecting price to come around here, and even to this level, okay, with our stop loss high around there. Okay, so that is it, because we could see price can still move up like this before it starts moving down again. So that's how we should put our stop loss here until price breaks the neckline. Once price breaks the neckline, then we'll go now adjust our stop loss here. So this is a zigzag pattern, 5 and then a zigzag, okay, that adds that is formed, okay, in which if price moves, it's going to complete a head and shoulder pattern. So as Elliott wave trader, we've already gotten there before the chart pattern guides get there. So that is how Elliott wave can work together with other technical tools, okay, chart patterns, candlestick patterns, harmonic patterns, and all that. So Elliott wave work together with all of them. So when all these things are confirmed with the Elliott wave, it makes them to even be more powerful. Okay, so we use all this, the combination of all these methodologies to give us a better decision making, and then in order to win over the market more often than not. All right, this is Sanmi Adeagbo. So we're going to see how price react to all these analysis. So these are the 5 that I'm looking at for now. So any other one that I discover, I'm checking all around, I will share with you. Don't forget to visit www.forexsniper.blogspot.com. don't forget www.forexsniper.blogspot.com in order to get can subscribe to my mailing list. All right, so this is the blog, www.forexsniper.blogspot.com. okay, all right, so this is the blog. You can visit my blog, www.forexsniper.blogspot.com, and then subscribe to my mailing list in order to get free trading signals, field trading analysis, okay, to take better trading decisions. Okay, all right, thank you very much. This is Sanmi Adeagbo. I thank you for joining me today, or I will see you some other times. All right, bye.